Okay, let's jump in. How long will this Metro Denver rental market stay hot? So it's a question we get all the time. If you are on this broadcast, I'm guessing you're an investor, you want to be an investor, maybe you're an agent working with investors, you're getting these questions. So let me give you my understanding of where we are, where I think we've come from, where I think we're going. I'll start by telling you I bought a property. I've been buying properties for 20 years. I have a portfolio of long-term buy and holds. I bought another one about 3 weeks ago. So I should tell you that if I thought this was a horrible time to buy a property, if I thought the market was about to collapse, I probably wouldn't have just bought one. I bought this little 2-bedroom, got a really nice deal over in Lakewood and rented it right away. And it continued to show me how hot the rental market was. So I'm a practitioner as well as a guy just kind of talking about it. But of course, nobody knows the future. I don't know the future. I'm a long-term buy and hold guy. I literally will never sell any of my properties as far as I'm concerned. So we'll have good days, we'll have bad days, we'll have good decades and bad. But I just bought another one because the market's really strong. So let me jump into this now. There are basically 3 drivers of the Denver rental market. And I'll tell you, this is pretty basic stuff. Like, I'm not going to throw all these weird concepts. It's kind of about supply and demand. And we don't have to get too tricky to understand what's going on. So when I wrote this, I just said, how do I present this? What's the best way of getting this message across? And I said, yeah, let's just talk about the 3 drivers. You've got population growth, which is the demand side. We have changing demographics, which again is the demand side. And then we have relatively limited rental unit construction, which is the supply side. And each of these things we'll get into more detail on. But that's basically what we're looking at. We're looking at the demand versus the supply, and that's what it's all about. So let's start with the demand. So all of you probably understand that Denver is a desirable place to live. If you were actually physically in a class right now, I'd say raise your hand if you're not from Metro Denver, and probably 60% of you or 70% would be just like me. I'm from Boston. I don't know where you are, but we've chosen to live in Denver, and we're not alone. This is a growing city. It's a wonderful metropolis. People want to live here. Population growth. So Patty Silverstein put together this. She's a demographer and a statistician. She has a private company, and she's a colleague of ours. And we use this data. And here's what she thinks is going to happen. This is 2018. She believes our population is going to grow 40 to 45,000 per year in Metro Denver for the next 10 years. Now, of course, this is a projection. You'll see here, wow, populations can grow 70,000 a year. And then we actually had 2 years where we actually had more people leave Denver than arrive in Denver. So this is speculation, but it's relatively informed speculation. And I don't know when the last time you were on a highway was in traffic, but you probably believe that we've added people to this metropolis and are going to continue to add people. And you know what? They got to live somewhere. It's not any more complicated than that. You've got a population growth. The entire country is moving to the west and to the southwest, and Denver is a big beneficiary of that in terms of the growth in population. There's another thing to look at too, which is changing demographics. So not only do we expect the population in Metro Denver to grow by about 500,000 people over this 10-year period, but we happen to be a very young city with lots of those millennials. And a lot of those millennials, guess what, are living at home, maybe with you. So 1, we have a growing city, and then 2, we have a lot of young people who someday are probably going to, I don't know, get a job, pay off their student debt, get married, have kids, need a place to live outside of their parents' home. 36%, is this an incredible stat? 36% of millennials currently live with their parents. So we do believe that over time, because we're a relatively young city with lots of millennials, not only are we going to increase our population, but the population we have is going to need additional housing. And let me tell you, if you're a housing advocate, this is a huge problem. Where in the heck are all these people going to live? I don't know. How about my units? Sounds good to me because I'm an investor. And if you're on this podcast or on this webinar, you probably have some interest in investing. This isn't why I just bought another property, but it sure helps. I sleep very well at night knowing that Denver is growing and our young folks are going to be out there looking for places to live. Question, Mike, how are you? What makes you think they'll move out? Yeah, that's funny, with 3 question marks, I might add. Yeah, you know, you're right. Basically, they're never going to move out. And yeah, I have no answer to that. Statistically, as millennials, as people get older, they do actually begin paying off debt, you know, falling in love, having the dream, getting a job. I believe it, but believe me, you know, you can prove me wrong. Come back in 5 or 10 years. They may still be in your basement, and that's true. I just think that other things being equal, if we had a really old population, I would say that it's less likely there will be more people moving out within Denver. With a young population, I think it's more likely. But I can't give you the facts and figures. That's just kind of what I think. So good luck with your millennial in your basement if that's the case. Now, talk about demand. Let's talk about supply. Supply is housing. And we look at this great chart right here. And what this chart shows, approved permits going back to 1992. We just updated it with the 2017 and projections for 2018. And what this tells us is kind of a leading indicator. If you figure if you pull a permit maybe 12 to 18 months later, you have a physical structure. This tells us the following. The black are the for lease permits pulled, and the teal are the for sale permits pulled. So what you see, for example, in the early 2000s is you had tons of for sale permits pulled. Why? Because, you know, the market was booming, money was free, it was easy to get loans, and the builders built lots of product. What happened is, of course, we had a disaster, had a market crash, and look how little was built here. And I'm foreshadowing a slide or two down the road because I'm going to talk about this. So what's been happening recently? Recently, you actually have a lot of for lease building. Compared to here, you're looking at the black, lots of for lease building. Is this going to increase the supply? Yeah, absolutely. That's exactly what it's saying, is that we do expect it to increase the supply of rental properties. The issue, though, is that a lot of this is luxury apartments that are being built. Why? Because we have a huge revitalization in downtown Denver, and we have a lot of your millennials who are getting jobs, making good money, and a lot of that demand is being satisfied by luxury type of stuff. I'm going to guess that most of you on this call don't have luxury condos or luxury houses for rent. Most of what we do is in the low to middle end of the market. And you know what? Nobody builds that kind of stuff. So I just bought a property, 853 square feet on 2575 South Sheridan. It's a C+ complex at best. I bought it from a guy who did a full flip on it. He bought it 3 years ago, did a really nice remodel. So it's like an A- property in a C+ complex. Nobody's building C+ complexes because you can't build them cheaply. And I feel that the numbers made sense. What I'm saying here is that I think you can misinterpret and say you have this huge supply of rental properties come in the market. It's really geared towards the high end, which most of us don't work in from the rental perspective. So let's put it all together. I want to have a really great shout out to the Denver Post. They did a very, very nice job a few weeks ago. They put together an article, and I'm stealing and citing right here this graphic. And it's about a housing shortage. And this is the one I really want to concentrate on because this is the one that tells the whole story. I just sort of built it up in the last couple of slides, but let's talk about the housing gap. The Denver area has been adding households at a higher rate than housing units for a decade. Let me repeat that. We've been adding households, more people moving into Metro Denver at a higher rate than housing units, permits pulled in construction for a decade. And let's look at the numbers. So what you see here is that I wish they used better colors because it's a little hard, but the light teal is households, okay? This is a family. Average household is about 2.5 people. So this is households, and this is housing units. So going back earlier in the century, you see that we actually had quite a bit of housing units built versus the household, which could have led to, say, a glut in housing. Sound familiar? But now, look what happened starting around 2007. For example, in this year, you had 10,000 housing units built, but we had 20,000 households. That means that we had 10,000 more households than we had housing units built. And year after year, for 10 years, that's what we've had. In this example, they have this cute little arrow here. We had 21,575 more households moved to Denver than we had housing units built. Do you see where I'm going with this? This right here means that we have a huge amount of demand. And these darker lines means the supply just isn't there. And that's exactly the definition of why our housing market has been so strong, both on the sales market and the rental market. Now, here we're talking about the rental market, so let's focus on that. Just think supply and demand. When you have more housing units built than people moving here, you have an oversupply at some point. And not a week later or a month later. These things take years to play out. What the Denver Post said, and I believe they're completely accurate, is we're looking at years of a very, very tight housing supply. And you just don't have to be a mathematician. So my wife's a mathematician. You don't have to be. You just have to look at a chart and say, wow, where are all these people going to live when we're only building this amount? And that explains why the rental market took off as it did a number of years ago. Rents skyrocketed. That explains what's going on here. And they'll continue to update this with the 17 data and the 18 data. But this is probably the most important slide for you to focus on because it brings everything together, both the supply and the demand. And I will remind you, if you have any questions, if I'm going too fast, if you want me to talk about something a little bit deeper, just feel free to reach out, ask questions. I'll definitely do the best I can. Love to try to answer your questions. So that is what's going on. The way I see it, we're looking at a housing shortage because so many people have moved here and not enough supply has been built to house these people. Pretty simple stuff. So let's put it together. What does this mean? Housing construction units are far from what's required to meet the population growth. Well, we saw that. As a result, low rental vacancy and low for sale inventory conditions are likely to continue for several years. And you might ask, how long? I don't know how long, a while. I think years, actually. When you look at this right here, this gap needs to be filled. Either all these people need to leave Denver, which is not particularly likely, or we need to build tons more housing for them, which isn't going to happen in the short term. So I think what's going to happen here is that we're going to have years of a housing gap. Put some numbers on it. We need to add about 22,000 housing units a year. And at about a 60% owner occupancy rate, that means we need to add about 9,000 rentals and about 13,000 homes for sale. And we're not keeping up with the demand. So if you're wondering why the housing market is so tight, well, it's because we're not keeping up with the demand. And same thing both on the for sale side and the for rent side. The result, pretty simple. High population growth plus changing demographics plus limited construction equals low housing inventory. And that equals the landlord's market we've been experiencing the last 5 years. And I'm going to get into a lot more detail into that because actually things are shifting a little bit. Some of the data shows this isn't going to last forever, but it's clearly a landlord's market. I got a tenant. I got a Section 8 tenant. I personally love Section 8 for this property that I just bought. And I was astounded by the rent I got. 853 square feet. Let's see. The place was in nice shape. It's 2-bedroom, 1-bath. I mean, just nothing particularly special about it. The heat is included. My HOA was only $175, so it was cheap HOA. I got from Jefferson County Housing Authority, I got $13.73 a month. I was blown away by that. Even a guy like me who does this all day, every day is kind of like constantly amazed by what the rents have done. And I think I know why. It's everything we just talked about. So any questions, let me know and I will continue. So I'd like to pull out this slide. This is U.S. home ownership rate, just to give you a big picture on what we're looking at. Back in 04, 05, when we peaked at 69%, this meant 69% of Americans lived in homes they owned. You want to know who suffered? The landlord suffered. It's all related. If people are living in homes that they own, then they're not renting. And every percent represents about 1.2 million people. So during this crash, what happened is people lost their homes. They didn't live in homes they owned. So we went down here to say 63% across the board. That means if it was, what's that, like 6 million, that's like 7+ million people who used to own now rented. The Denver number is about 61% of Denver families live in homes they own. So this right here, all things being equal, would be a terrible market for landlords. And I owned 29 units right here when we hit 13% vacancy. I'll show you that slide. It sucked. Why? Because people could buy, they didn't have to rent. We are now in more of a rental economy, environment, civilization, and this is a really good time for the landlords. And that's why landlords are really enjoying this period of time. It's this number right here. So let's look at this. This is from the Apartment Association in Metro Denver. This is some great data I pulled this morning. And sorry, I kind of messed that up a little bit. Let me take that out because it looks terrible. Okay, feel better. So this is vacancy rates versus rents. And this is for 5+ unit buildings. And what you see here, I just like to give you some perspective on time. What you see here is the average rent in dollars are the green bars. So for example, in the fourth quarter 2012, the average rent was, I don't know, what's that, like $900 or something like that? And you've seen the average rents went up really strong during this period of time, and it's sort of leveled out a little bit. And right now they're, a little below 1,400. And then this right here is the vacancy rate. And what you can see is that we had vacancy that go up and down, a lot of seasonality in vacancies. That's really important to see and to understand. And we are, if you draw this line right here, this was about, this was about like 6%, and we're just about there. We're a little bit higher right now. So this quarter, we're at 6.4% vacancy. But if you go back to this quarter in 2015, we were 6.8. So while you've seen some articles in some of the daily papers that the vacancy rates have been going up, it just depends on where you draw your data from. If you draw it from a quarter ago, it can be different because there's seasonality, but I like to look at a longer perspective. So this right here is 5 years, and nothing about this is particularly worrying me. Question from Nick. Hey, Nick, can you talk a little more on Section 8 and what a landlord needs to do to be eligible, please? Sure. Let me give you a couple minutes, and then always happy to take a phone call later if you want to chat about this. Happy to be a resource. But basically, Section 8 comes under the HUD code Section 8. And there are millions of vouchers that are paid for by your taxes to help lower income people afford rents. So for example, Denver Housing Authority, I think, has something like 8,500 vouchers. I think Jeffco has like 2,000, Aurora Housing has 2,500. So there are these organizations that are built to provide housing vouchers to people to pay for rents from the private sector. So in this case, all I did is I put an advertisement on Craigslist, and I use go-8.com. They have like a $50 option. I don't even use that. I just use the free version. And then people, touch base with me, and they say, hey, I'd like, to take a look at your place. And it really kind of works like the market. Like if my place sucks and it's awful, people won't want it, whether they're Section 8 or not. This place I just bought was beautiful. The first person I showed it to, she wanted it, all excited. And then what happens is she gives me the HAP paperwork, the housing assistance paperwork. We fill it out. I hand it off to Jefferson County. And then about a week later, they'll set up an inspection. And then as long as I pass the basic health and safety inspection, we'll start. And then I can get up to 100% of the rent paid by the government. It just depends on her income. I think the threshold is that 30%, up to 30% of their income needs to go towards the rent. So I have some landlords where I'm getting 100%. Some tenants pay me $100, $200. I have tenants that work. They're Section 8, but they work. They have jobs, and they're paying, say, $400 out of $800. And Mike, I see that you said that your audio is cutting out a little bit. We just checked it here, and it seems to be working here. If anybody else is having trouble with audio, yes, welcome to technology. Please let us know. But we actually have a second computer running. Channing's on it. He's getting the audio. So hopefully it's back. Just let us know. So Nick, hopefully that's a basic primer on Section 8. And I'll tell you, ask people about it. it's kind of like, religion and politics and Yankees versus the Red Sox. I mean, people have strong opinions, and you'll talk to a lot of landlords who hate Section 8. One of the advantages to me are landlords who hate Section 8, because in a strong market like this, they won't take Section 8, which means the Section 8 tenants are even more, how do I put this, willing to be good tenants. And people like me who are very comfortable with Section 8, I get great tenants. I love my Section 8 tenants. I literally won't ever take a non-Section 8 tenant. I don't think I've taken a non-Section 8 tenant for 4+ years, and I don't know that I ever will. So I'm a big advocate of Section 8 myself. Your Castle also does a lot of work. We just donated $20,000 to Mercy Housing, and we are working with Mile High United Way. They're getting a voucher program that we're going to help sponsor and bring in some landlords to commit to a number of units that will go towards them. So, good or bad, up or down, black or white, left or right, you have to make the decision on if you like Section 8. What I would say, though, is that I wouldn't just hate it or love it. I would look more into it and see if it makes sense for you. Nick's asking, who sets the rent? Very good question. So basically, the way it works is that it's supposed to mimic market rents. And literally, this is Apartment Association of Metro Denver data. This is what they use, is my understanding, to load into their computers to figure out what the market rents are. So each Section 8 agency works different, and it's a little complicated. And what I can tell you is that oftentimes you won't know exactly what the rent will be, but having done this for 20 years, what I can tell you is that that the Section 8 rent mimics the market rent pretty well. Sometimes it's $50 above, sometimes it's $50 below, but it's pretty close. And Mike, I do see you're saying audio is cutting out. I'm not hearing that from anybody else. Sorry. If it is, you can, we record these, by the way. So just a little bit after we're done, there'll be a recording if that's better for you. But I'm thinking maybe it's on your end, just because I'm not hearing anybody else isn't having audio problems. So hopefully hang in there. So Nick, and now sound is okay. Yay. So Nick, hopefully that gives you like a beginning on Section 8s. If you want to give me a call, happy to talk about it. As a landlord, I love Section 8. As a taxpayer, maybe I'm not so happy with it. Maybe yes, maybe no. But I'll tell you, as a landlord, it's done very, very well for me. And any more slides, please just jump in anytime. Love the questions. This is another graphic from the Apartment Association of Metro Denver. And I know it's hard to read, just basically, forest for trees, right? Let's look at the rents per square foot by county, and I'll make it a little bit bigger. And what you see here is that, let's look at metro area. And this goes back, let me go down to here. So the bottomed out in about 06, it looks like. So if we look at this is 06, and what we see is, as one metric, the rents per square foot were maybe, 75 cents per square foot. And now it's about, maybe about 115. This is just an interesting way of looking at it. For example, Denver's, this one right here, you can see that most of them go up roughly the same. For some reason, Boulder Broomfield does this. As someone who knows a dangerously small amount about statistics, I'm assuming this is because they have fewer rentals, or fewer landlords are actually giving the data, and that's why it's spiking and going up and down so much. But Denver, for example, where you have lots of data and of course gathering all together in the metro, you see a much smoother line. And that right there is the definition of the market. Oliver, hey Oliver, how does Colorado Springs market compare to Denver? So totally different question, and a different, different everything, but I've done a little bit down there. I've helped some buyers buy down there, and it's pretty much mimicking, I believe, Denver, just a couple years behind. So Fort Collins, the northern Colorado, has really been right on track with Denver in terms of price increases. We were happier a few years ago buying Colorado Springs because there seemed to be more of an arbitrage. We were getting better cap rates, in other words. These days, we're not getting such great cap rates. What you will see is that overall prices are still lower, for sure, in the Springs, and rents are lower, but the cap rates are relatively similar. It's worth looking at. worth going down there. Give me a call. I'll be happy to talk to you, more about this. I haven't done anything down there for about a year, but we did buy Sherwood Real Estate. So I have an office down there that I helped run with about 80 agents. So we have a good amount of data on the Colorado Springs market. Like everything, if you're interested, I would say you might want to go down and check it out. Good question. So this right here just gives you an idea of the increase in rents, which I'm going to continue to talk about after this slide. So let's talk about rent affordability. So what we know is that rents have been going up a lot. And what we know, or what we believe we know, is that rents can't go up forever. But that doesn't really answer anything. It just says, well, it can't go up forever. How long can the rents go up? Well, one way of looking at it is looking at rental affordability. And let me make this really simple. This right here, this dark blue line, is the average rent in Denver from 1981 to today. And then this dark blue line is the Denver per capita income. What I want you to see is that it's actually really close, that line and that line. So while rents have skyrocketed, so have the wages. And that's where affordability comes in. So we put it all together. I want to concentrate on this right here. This is the rent as a percentage of per capita income. And this is the metric we should look at. So in the 80s, rents were very expensive in Metro Denver. It took about 30% of the average wage earner's income to rent a property in Denver. And historically, that was very expensive. What we saw over this decade is that plummeted and went all the way down to about a little less than 22%. And this, of course, meant that rents were relatively inexpensive. They went up again, and then they went down for this long period of time. So let's concentrate on 2011. In 2011, it took about 19% of the average wage of the average worker in Denver to pay for their rent. That was extraordinarily affordable. So the point is, have rents gone up? Yes. Have wages kept up with rents in Metro Denver? Absolutely not. That's why it's become less affordable. But we need to see it in a historical context. You read an article and they say rents are unaffordable. They've gone up for years and wages haven't kept up. That's true, but it's also important to understand that while rents have gone up, they had been very affordable in 2011. So where are they today? Well, it's important to see we're past what we consider to be the 40-year average. We consider about 24% when you put all the data together to be the average. And here's what I'm telling you, rents have continued to go up and they're above average now. Now, am I surprised by this? Well, no, this is exactly what happens when rents go up faster than income. Of course, it's going to become less affordable. Are rents unaffordable? Well, I don't know. I mean, put something for rent and see if you can get it rented. Unless you are renting a luxury condo downtown, my guess is that 9 out of 10 times you're going to fill the unit at the market rent. But if and when this continues to go up, and I do think it will go up, although I do believe it's going to flatten out, and I'll show you that in the next slide, sooner or later, rents really will be unaffordable. And this right here is unaffordable. So is it 27%? Is it 29? Is it 31? I don't know. I don't think anybody knows what unaffordable means. But we're certainly heading there. So good news is wages have started to pick up and we'll begin to flatten this out. So I would just say stay tuned. But what's so critical is to understand the perspective of 40 years. Don't just say rents aren't affordable because they've become less affordable over the last 5 years. That doesn't actually tell you much. What tells you a lot is that we are now above the long-term affordability index. It's continuing to get less affordable, and sooner or later, rents are going to have to flatten out, which leads me to this. Rents starting to flatten out. So this right here is more Apartment Association of Metro Denver data. What we did years ago is we took 2 slides. We took their vacancy rate by quarter, which is this, going back to 1981, and we put it over the median rent by quarter. So what you see is that when vacancy rates go up, and they go up over a number of years, rents flatten out and start to go down. Got a question here? Matt, do you look at household income where there are 2 or more income earners? So I'd have to go back to Lon to see how we did this. I can't swear that we do. I know we got some resource to give us the average income per household, and I'm going to guess that the answer is yes, but that's a detail that I can't swear to. If you want to send me an email, I can try to find out where that data came from. But it was, it was the best data we had. It was some sort of published data that talked about the average income per household every year. So I'm assuming the answer is yes. Good question. So once again, when vacancy rates go up, what you see is that rents start to fall down. And what's so important is to understand these don't spike. They don't go like that. They go in kind of 10-year increments. Not exactly 10 years, but pretty long increments. So vacancy rates start to go down here. The market reacts. And you have this 12-year period right here where rents went up 9.5% per year. Absolutely skyrocketed. Why? Well, because we had low vacancy. That's why. Now, here we come into a downturn, we have a market crash, we have higher unemployment, and we had lots of lending for homes. Perfect storm. I had 29 units here. That sucked. We hit 13.4% vacancy rate, almost 14% vacancy rate. What do you see? Look at that. The rents start to slow down, go down somewhat. And we have this long period here, 12, 13 years, where literally the rents didn't go up in Denver. They didn't even keep up with inflation. And this was not a particularly fun time to be a landlord. High vacancy rates here and rents not going up. But as always, the market corrected over time. And here we have what you see is low vacancy rates. And what happened? During this period of time, you had high rent growth, over 10%. 2012 to 2015 was that real shot up, of course, because this was the leading indicator. Since then, vacancies have gone from, say, that line to this line, not dramatically higher, but look at that. The market seems to be somewhat affected. So I'm looking at this saying that was a great swoon up of about 40% in rents during this 4 or 5 year period of time. Rents are still going up, but with vacancies ticking up a little bit, I'm guessing, like I said in the last slide, that rents are starting to become a little less affordable. And I would guess that rents might go back more towards right here. The 40-year average has been about 4% per year. That's my best guess. Take it or leave it. Throw darts and arrows, whatever you like. I'm going to go with maybe 4 or 5% rent as a guess. But I'm also going to tell you, I'll refer again to I just bought this property. I didn't sit down and analyze, rents are going to go up 4% for the next 3 years. Why? Because I really don't know if they are. I just know that I'm going to own it forever, and it was a great property, and I bought it. So that might sound simplistic, but that's what a guy like me does, and that's what a lot of our folks do. You can get yourself awash in the data, and unless the data actually tells you something, I believe you can take a step backwards by thinking the data is telling you something it isn't. I look at big picture stuff. My big picture stuff is vacancies are up a little bit. Maybe the rents won't go up 8 or 10% a year. Maybe they'll go up 4 or 5. That would be my best guess on what's going to happen. And with that actually concludes how long this hot rental market is going to last. Really what I'm saying here is that I do believe because of the demand, people moving into Denver, not that many people leaving, some people, but not that many people. We're still very much a growing population. And with the market, the supply, inventory of rentals remaining low, especially in the low to middle income, nobody builds that kind of stuff, I'm pretty bullish. I think this is going to continue for a while. Now, I'm a guy who's gone through this. I went through this when I had a lot of properties, and this was not fun. And I will tell you, if you want to be an investor, you got to understand that things will happen. Maybe we'll do this for a while, and then maybe we'll crash. Who knows? So I think we should be thinking long term. But my feeling is we're still buying, I'm buying, and my buyers are still buying. If there's anything that I can advise you with, help you with, if you're an agent, always happy to chat about this. If you're looking to buy some stuff, just feel free to reach out. We'd love to. I'll take another few seconds just to see if there are any last questions. But I appreciate you guys hanging on. This has been really, really fun. If there's anything we can do for you, let us know. If you have any suggestions on future classes, definitely love to talk about this stuff. And I do have one more question from Matt. I'm curious, what cash on cash you're getting on properties you purchased lately? It's a good question. So let's talk about metrics a little bit. I like cap rate, and cash on cash is the second thing I look at. Typically, if I looked at, say, the 25 or so rentals we bought in 2017, we were typically getting about a 7.5 cap, which was about 11, 12% cash on cash, putting 20 to 25% down at current rates. Right now, I have nothing under contract right now. And that's very rare. There's so little on the market. I'll be completely honest. I've got nothing because what I'm seeing is basically 6.5 caps and about a 7% cash on cash. So we're just not buying at this moment in the last week or two. I experienced the same thing last year in January and February, just incredibly tight. And then things started to open up in March, and actually just had a call with one of my investors from Germany who's, wants to get moving, wants to buy more. And said, Ariel, just patience. You don't want to be buying. Slow down a little bit. We'll find you something. So to answer your question, historically in the last year, we've been getting in the 10 to 13 cash on cash. Occasionally we'll get like an 18 to 20. And we really love that. But 10 to 13, right now, though, it's single digits, and we're just not buying until more properties come on the market. That's the bottom line. The one that I got a few weeks ago, I mean, you didn't even want to hear it. It was astronomical. It was just a buddy of mine who wanted to sell it. He said, Charles, if you want it, I'll give you this price. It ended up being an 11.8 cap with a 26% cash on cash. I didn't even want to buy a property. I just figured, what the hell? I just bought it. So doesn't happen very often, but when I get numbers like that in a fully remodeled property, I did buy it. So full disclosure. So with that, thanks everybody. Have any follow-ups, please let me know. We did record this. If you want to go back and hear it again, you'll get, I believe, an email with the recording information. And thanks. Tune in. We'll see you next time.